Hello everybody and welcome to the market update. This is your instructor Scott C. Today is April 21st, 2024, and let's start with what happened last week. So here's a chart of the S&P 500, and you can see that we started our run at the end of October last year, and all along the way I've been saying, hey, you know what? Be cautious, protect profits. Nothing goes straight up or straight down. We're overextended. Look for a pullback. Well, you don't want to miss any kind of huge upward move like this, so run with it. This is where the big money is made in the market, is you catch a major trend and you ride it to the top. But when you start getting overextended, it's okay to be cautious. Lock in gains, tighten up stop losses, and we finally got that breakdown. We're getting that pullback. Now, after such a huge move, one of the things I like to do is map out that move with a Fibonacci retracement. So if you go to this little icon just above the chart right here, click on that, and then you can go down and click on Fibonacci. We're going to start it right here at the low, and we're going to move it up to the high, and we've now mapped out that move. So if we get just a 38% retracement, that could put us all the way back down right here, near the 4,800 level on the S&P 500. A 50% retracement puts us right back down near the 200-day moving average. And then a 62% retracement, I'm starting to have some problems with a move down that much. I think a lot of people would really be panicking. But if you'll notice, those old highs right back here, old resistance becomes new support, we still could find some good support down there. Let's zoom in on just last week. And I might just grab a couple of days from the prior week also. So here's Friday, Thursday, Wednesday, Tuesday, and Monday. You'll notice that every day was a down day last week. Well, Friday, the semiconductors led the charge on the way down. And everybody's got their eye on NVIDIA. And NVIDIA had a horrible day. Dropped 10% just on Friday. Now that spells problems. When you get a big drop like that, especially on this high volume, expect some more downside. With this AI boom, NVIDIA is poised to do really well. So at some point, we're going to look for a nice entry. But right now, it's just not looking so good. Plus, it didn't help that formerly dovish Fed President Austin Goolsbee had some hawkish comments on Friday. He said that given the strength of the labor market and progress on easing inflation seen over a longer arc, I believe the Fed's current restrictive monetary policy is appropriate. Now, he said this during an appearance before a business journalism group in Chicago. And then he said, I think we have to recalibrate and we have to wait and see. So basically, the market is not happy about rates not getting cut. It was expecting 3 rate cuts this year. Doesn't look like that's going to happen because inflation is a little bit more sticky than everybody thought it would be. So it looks like the dominant view at the Fed is that rates need to stay high for longer. In the last 3 months of higher than expected inflation data, the Fed is saying can't be dismissed. So I think the market's finally seeing that, yeah, you know what, maybe we're not going to be getting those rate cuts. And then Goolsbee notably didn't rule out a fresh rate hike possibility in the face of sticky inflation. So now if we go to the FedWatch tool, it looks like the market is pricing in that rates are going to stay the same for May. But you'll notice if you go out to September, the market is still actually pricing in the potential for a rate cut. at about 45%. Now, the Fed has kind of come out and said that, yeah, we might not get those 3 rate cuts, but I think the market is still eager for rate cuts. So watch out. More hawkish comments from the Fed could still be quite disappointing for the market, even though the Fed keeps coming out and saying, yeah, we might have rates remaining higher for longer just to get this inflation stuff under control. And then another thing that everybody's been watching this last week was the Bitcoin halving. And that actually occurred Friday evening. I know they've got a date right here set as April 20th, but it happened on April 19th in the evening. I was actually watching it. Wasn't expecting anything really to happen with Bitcoin, but basically what's happening is the mining reward just gets cut in half. So when those miners verify a block of data, and this happens every 210,000 blocks of data, instead of getting paid 6.25 Bitcoin, their reward just got cut in half. And so it's a schedule that's built into Bitcoin that makes it so that fewer Bitcoin are released onto the market. Unlike our government just printing more and more money, Bitcoin has a cap at 21 million. And once that cap is reached, there's going to be no more Bitcoin minted and sent out there onto the market. So now there's about 209,771 Bitcoin blocks until the next halving date, which should happen in about 4 years from now. And they base that on the fact that every 9 minutes and 45 seconds, a new block of Bitcoin data is verified. There's a 3.125 Bitcoin reward to the miner that verifies that block of data. And then in about 4 years, or again in 209,771 Bitcoin blocks, there'll be another halving, and the reward for mining and verifying and stabilizing the blockchain just gets cut in half again. So folks, it's all about supply and demand. There's less supply of Bitcoin being added to the market, yet demand is still there. We've got all these exchange-traded funds buying up Bitcoin, and I think a lot of people are looking at Bitcoin as a store of value, kind of like digital gold. They don't want their money just sitting in the bank account, losing value to inflation, when they could go into Bitcoin or gold or silver or something as an inflation hedge. So what's next? What can we expect out of the market next week? And what are some of the things I'm looking at? Let's start with the Forex Factory calendar. And on Monday, tomorrow, we don't really have any major announcements. Tuesday, we've got the Flash Manufacturing PMI. And this is where those business managers make their purchasing decisions. And these guys have all the most current relevant data on the market, and their purchasing decisions give us a little bit of an indicator on our economic health. Wednesday, you've got the core durable goods orders, which isn't really expected to have any major impact on the market. Thursday, you've got some inflationary data, and you know that the market is very reactive to any inflationary data right now. Got the unemployment claims. And then Friday is really what we should be looking for. This is the core PCE price index, which is the Fed's favorite inflationary measure. We've already talked a little bit about the S&P 500 and how we might be sitting at some support right here. We could potentially get a little bit more of a pullback based on the Fibonacci retracements that we looked at earlier. But one of the things I like to look at is kind of a cheat, is a chart of the QQQ. The QQQ generally tends to lead the rest of the market. So I'm going to go into a 10-day, 30-minute chart, and I'm looking at the 10-period and 50-period moving averages. I found that you get a little bit of a crossover system here on a shorter-term chart, gives you some quick heads-ups on which way the market is heading. So you'll see that we had some chop. The 10 was crossing above and below the 50 a little bit. And then it finally crossed back down below on April 12th, which was a warning sign to get out. And so short term, we've been out of the market on the sidelines, at least I have, because of this indicator, because of this tool that I use. And when the 10 crossed below the 50 on this 30-minute chart, to me, that was a signal to play it safe. Go ahead and get on the sidelines. Now the 10 is still below the 50, so I'm still playing it safe. When it crosses back up above the 50, all right, game on. Market's looking good again. Now we saw the market take off at the end of October, yet you'll notice how gold really just kind of stayed sideways for a while, and it was because the market was actually expecting inflation to get under control. And then it started waking up right here at the end of February, realizing that inflation wasn't coming down the way the Fed wanted it to. And money started moving into precious metals. And that's why gold here has started taking off a little bit more recently. So even as the market pulls back, you've seen gold and silver making a pretty good run. And do you think inflation's coming down anytime soon? I mean, just yesterday, on Saturday, April 20th, the U.S. House passed a $95 billion Ukraine-Israel aid package. So we're still spending a lot of money. There's still a lot of geopolitical events out there right now that have the market a bit spooked and have our government spending our money. Also of note in that bill was a proposed ban on TikTok. Now, I don't think TikTok's going away anytime real soon. They're going to fight that, of course, and they've got a year basically for the Chinese parent company to sell it to a US-based company. Something to keep an eye on. So I'm keeping an eye on some gold ETFs. Here's GLD. And also gold miners tend to lag a little bit behind the price of gold itself. So these small mining companies that might be issuing more shares and diluting their shareholders have scared off investors. And so when gold starts climbing, they're the ones that tend to lag behind a little bit, but play a lot of catch up. So I don't think we're too late to the game with some of these gold mining ETFs or even gold miner stocks. GDX, which is the Van Eck Gold Miners ETF, is a good one to be looking at. And if you want to use a little bit of leverage, you can look at NUGT, which is a double leveraged gold miners ETF. Looks to be sitting at some resistance, ready to break out, and could move a lot higher. If we go to a 3-year chart, you can see that there's plenty of upside to this one. Now, if you want individual gold companies, gold mining companies, NEM, this is Newmont Mining. This is a good one of the big players. You could also look at Rio Tinto. Earlier, I brought up the SLV, which is silver ETF. Might be a little overextended right now, but look at this volume. A lot of money pouring into it. And if you want individual silver mining, First Majestic Silver Corp, ticker symbol AG, could be a good one to look at. The majority of their revenue comes from silver, but they also have a lot in gold. Pan American Silver Corp, which is PAAS, they have huge silver reserves. Wheaton Precious Metals is another good silver mining company. Sitting right at resistance, looking like they're wanting to break out here soon. If you follow me, you also know that I have been paying attention to the cannabis industry. So MSOS, this is a good cannabis ETF. And if you want a little bit of leverage, MSOX, which is a double leveraged cannabis ETF. Now, one of the things I like about this is the option premiums are really high. So if I actually like this ETF, and I wouldn't mind buying into it right now at 464, we can go into the options that expire here on May 17th and look at like the $4 put. I wouldn't mind getting put into this stock at $4. I already like it at 464. Why not sell the $4 put for $65 a contract? So I sell one contract. I'm on the hook for buying the stock at $4. I'm okay with that. Buy 100 shares at $4. That's $400 that I've really risked. And on top of that, I get paid $65. So kind of a good way to start building a position in an industry that I think has a lot of potential. There's a lot of legislation coming out that, if positive, could have very good bullish implications for this entire industry. So whatever you decide to do this week, be safe, good luck, and happy trading.